and Story again with tips on trading. I'd like to talk today about the most common mistakes that traders make. There's many mistakes. There's lots of rules and lots of things you need to learn how to follow. But these 8 are the most common ones I think you should pay the most attention to. And if so, you'll compensate for many of the other mistakes that are made as well. The first is lack of education. So many traders are trying to get educated by themselves, by picking and choosing from their own perspective, their own limited perspective for that matter, what they should learn. And it takes much longer. There's many more mistakes. They don't see the pitfalls coming. They take much greater losses in the attempt to learn it. And frankly, many of them give up and don't survive the process because of that. So improper education is the first mistake they make, by not being willing to get the right education and make the sacrifices to obtain it. The second is not having a trading plan. Well, that comes along with proper education. So it's very interrelated there. But once you have the right education, you've still got to take the information you've learned and organize it into a proper trading plan. After that, insufficient perfecting or proving of that trading plan. They get too anxious, impatient to jump into live trading before they're really ready. They want to take the trading plan and they're so anxious to make money, they jump in and they haven't yet learned how to prove it as a live trader. So they take a lot of losses because their emotions get in the way. They haven't learned to discipline themselves well enough under all circumstances to being profitable. The next one is not staying focused on the trading plan. Now, that trading plan is critical. Once you've proven it and mastered it in a demo account, and you've done it long enough and you've increased that demo account well enough that you're able and the timing is ready to move on to becoming a live trader, you must learn to focus on the trading plan and not become distracted. Too often the trading plan is just in writing, but you haven't ingrained it in your mental processes. You need to put it up beside your computer, simplify it, break it down into a bullet points list of points that you've got to remember all the time, and always ask yourself, am I trading within my trading plan? After that, it's dealing with emotions. Trading on emotion is death. Okay, if you want to commit suicide in the Forex market, just trade on emotion. Your emotions will cause you to hesitate. Your emotions will cause overconfidence, greed, revenge, competition, you name it. It'll all come out. You don't want to trade on emotion. You got to face yourself and learn to discipline yourself to stay away from those emotions, all right? The next area is thinking you are smarter than your trade plan. Now this comes from a guy who wants to be a gambler. If you want to go to Vegas, go to Vegas. Throw your dice on the craps table and gamble. But don't do that in the Forex market. We don't want gamblers here. You want to be an educated, calculated, well thought out, researched trader who disciplines himself to the trade plan and learns to do that consistently, not allowing his emotions to get in the way. You are not smarter than your trade plan. And you should not be tempted away from the trade plan. Why? That's because you're in the environment of trading. You're smarter when you're not trading, believe me. And that's when you ought to be creating your trade plan, when you're not trading, when emotions are not there affecting you. All you want to be doing on a trade plan is learning to focus on that trade plan, trust in the trade plan, and follow the trade plan, managing your emotions so that they don't get in the way. The next thing is being too cautious. Well, this is about emotion again. Being too cautious, this 7th item, is so critical because the reason a person is being too cautious is because they want to see where the market is going before it goes there. They don't want to get into the trade until they feel like they have assurance and confidence that they can actually see it going where they want it to go, and then they enter the trade. When you do that, 1, you miss about 3/4 of the opportunity. 2, you often get in so close to the end of a trend that if you don't realize what you've just done, the trend is going to end, look like it's retracing, and it's going to go the way you want it again, but it's over. It's already over. You were chasing the bus, sucking the fumes off the tailpipe, and you're going to choke because the market's going to turn on you, okay? Don't be so cautious that you always have to see the market go where you want it to before you enter a trade. To do that, you're going to have to learn how to forecast, okay? Number 8 is, again, not sticking to the trade plan. This is very interrelated with other areas I've mentioned, but stick to the trade plan. When you create a trade plan outside of a trading environment where you think most logically, most clearly, most broadly, that's where your trade plan is going to be created the most effectively. And when you get in the trading environment, where emotions can get involved, the most important thing you can do is stick to the trade plan. Stick to the trade plan. Stick to the trade plan. You will find that once that trade plan is perfected enough, almost every single mistake you make, every loss you take, you will trace back to not sticking well enough to the trade plan. This is Tips on Trading with Stephen Story.